Good evening, everyone, and welcome to the Brian Crombie Radio Hour. We're chatting tonight with Daniel Foch of the Canadian Real Estate Investor. He's the host of a really interesting podcast about the state of the real estate market in Greater Toronto Area, Canada today. Daniel, you posted, actually, I'm not sure you posted or you just shared someone else's post about an unbelievable increase in listings, a very small increase in prices, and a decrease in sales. And it sort of didn't make sense. And I was wondering, what you make of the current market where listings are way up, but it doesn't seem to have impacted pricing yet.
Yeah, so as it stands, supply is definitely outpacing demand, but probably the reason that it hasn't really impacted prices is that a lot of the supply that's coming on the market is condos, right? And I know you and I have had a couple of conversations about condos and what's happening in the condo market. And it seems like a lot of the new supply on the condo market that is coming online, people are choosing to sell it rather than rent it out, or at least they're trying. And so that materializes in a lot of new listings. But the market seems pretty strong for your single family detached houses in the 416 especially, and in the 905. And so there's, kind of more transaction happening with those, let's call them larger, more expensive houses. And that is causing prices to be relatively stable, because when you look at your average or median price, it can get pulled up by, those higher value detached homes transacting.
So it's as if there's really two or three markets, and they're what? They're not connected. The condo market, the townhouse market, and the single family home market really aren't connected, and you can have this massive increase in supply in condos, and some people are talking about 20-30% decline in condo prices on a per square foot basis. That's just not translating into single family homes.
Yeah, I guess it hasn't yet, right? I mean, like the way it appears is that condos have really it's really been an isolated problem in the condo sector. Single family detached homes, like, we really haven't built a lot of them relative to apartment starts, and so they're becoming more and more scarce, right? And so it's reasonable to assume that they could hold their value better than condos, even when facing a massive increase in supply.
So I'm seeing statistics that they're on the market for a far longer time,
Yeah.
and there are some price reductions, and particularly on pre-construction residential housing. There's even assignment sales there. So people are having difficulty, making the numbers work to close on single family homes that they had contracted to buy, but it's not happening. It's not impacting the resale market yet.
Yeah, I think the assignment it's interesting because, if you look at houses that were built maybe in the last couple of years, or sorry, pre-sold in the last couple of years, and they need to sell today, they would have a much higher price point than houses today. And so even if the person was willing to cut the price, let's say let's say that house was pre-sold at 20% more than market value. If the purchaser was willing to cut the price by, another 20%, it would just be hitting today's resale price. And so they need to be taking a much bigger loss in order to actually, hit the point where they can pull the resale price down. And that's what we're seeing in the condo sector as well. I mean, some of these condos sold for 30 or 40% above current market value on a per square foot basis. And even then, if they're not willing to sell at a loss of 30 or 40%, then they're not even really competing with resale supply on the price side.
So let's talk about condos then for a couple of minutes to understand that market.
Sure.
These statistics far better than I, but so I've been given the impression that people were selling condos for $1,400, $1,500 per square foot that are now selling for $1,000 per square foot or less. So that'd be like a 40% decline. Is that true?
Yeah, that those statistics would check out. I mean, your resale market's about $950 to $1,000 a foot in the 416, probably a little bit lower in the 905, and condos in 905 and the 416 were selling for as high as like $1,400 a square foot.
So if those numbers are right, people put down what, 20% in deposits? So they put down, let's say it's a for ease of numbers, 1,000 square foot condo, which is way bigger than most condos, but just for ease of numbers. So they put down 200,000,
Yeah.
and it's now down 400,000. So they got to come up with what, another 200,000 just to close, and that's lost right away.
Yeah, so technically, they should need to come up with the difference in between with their equity and the valuation, but they're not really being asked to do that by the lenders on these deals. And that really is becoming the question of like why, right? So basically the banks typically do a thing called blanket appraisals on the closings of these. So where they basically have appraised the entire building at the value that they transacted at, because there's 100 or 1,000 other purchasers who are willing to pay that price, and so they feel that it's reflective of market value. And so the banks aren't really marking to market these the valuations on these condos. They're closing them based on loan to purchase price, not loan to current market value. So in a lot of cases, the buyers actually aren't expected to come up with the extra 200K that you just described. There are cases where they are, but I would say, but from what I've seen in the majority of cases, they're not expected to come up with that. The banks just close it based on the original purchase price, and then it becomes the owner's problem at that point, because they're probably a cash flow negative and equity negative, so they never really want to sell the property, and they're not making money if they rent it out. The bank probably, frankly, doesn't mind that. I think they've probably underwritten the risk. They've said, okay, yeah, maybe 10% of these are going to go delinquent or whatever percentage they feel, but they also know that if that condo is not in the money today, it's probably not going to be in the money in 5 years or 10 years even, maybe. And so they know they have that borrower probably for a long time. And so it actually helps them reduce their future cost of customer acquisition, right? Because they don't have to get that borrower again or new borrower again to replace that one in 5 or 10 years. Because that borrower probably can't shop that renewal because they don't have the equity.
Wouldn't the bank have to write down the asset on their balance sheet though? Like they've got to do market valuations of their assets, so they can't lie to the regulator, can they, about what the value of their assets are?
Yeah, it's a really interesting question. I mean, it's an important question that I've been asking people, and I haven't really got a clear answer on it yet. I mean, there's a handful of journalists working on this story that have asked this question to OSFI and to the banks themselves. And nobody seems to be getting a clear answer. The other piece of it is that, and I'm not sure whether or not this is taking place, but typically banks, to reduce their capital costs, will insure loans. Like when you go to get a loan, you'll typically see that there's better rates for insured or insurable loans, they call them. And insurable loans would basically be something where if they're all at a certain loan to value, they can put a blanket insurance on the portfolio. So the bigger question would be, are the taxpayers insuring these loans that are being stated as 20% loan to purchase price, but they're actually, maybe 120% loan to value? So, I mean, I don't know, perhaps your investigative skills can find the answer to that one.
I'm told that this isn't, for most of these investors, a one-off problem. They've invested in like 4, 5, 6 of these condos, and so that the typical person that played in the pre-construction condo investment market did it more than once.
Yeah, I would say that by the sounds of it, that's the case. It's not really a space that I operated in as a salesperson, fortunately, but and a lot of it was because I just didn't really believe in the values. But I find that from the anecdotes and the developers that I've spoken with and stuff like that, I find that people definitely were doing more than one. Like anybody who was bullish on this, because the down payment requirement and the deposit requirement was so low, they were doing a lot of them for sure.
So what's going to happen? You've got this. I think what the number is that you shared was like a 48% increase, 148% increase in listings. So they don't want to rent them out because they're going to lose money on a monthly basis if they rent them out. So they want to sell them. If they sell them, they're going to take a loss versus what they had bought them for. And the supply demand imbalance would suggest that prices have got to come down even more. So the loss would even be larger than what we're talking about with that 40% right now. So what's going to happen?
It appears that like I would be of the opinion that anybody who chooses to close on the property probably is bullish, right? Or they at least think that that property is going to eventually be worth what they paid for it. And so because otherwise, like if you take possession of the property, if you want to sell it, you now have to pay switching costs. So like you have to pay a realtor, you have to pay land transfer tax, double land transfer tax if it's in the city of Toronto. There's a lot of factors that would make it more expensive for you to take possession of the unit and then realize the loss. So I'm of the opinion if somebody's just going to realize the loss, they probably are just going to fail to close and get sued by the builder for those damages. It's just a cleaner and cheaper process. It's not a good idea by any means, but so most of the people who are taking possession, I would say, intend to rent the units out. And so they've sort of elected to what I would call lose money slow rather than lose money fast, right? So if they've said, okay, I'm sitting at a $400,000 loss, like you described, or so I can lose $400,000 immediately, or I can lose $1,000 a month for the next
40 years.
Yeah, well, it'll be longer than that. It's gonna be 10 years, probably 20 years, realistically. They're electing to do that rather than take the big hit right away. And that would tell me that probably means that they can't afford to take the hit, which is probably the bigger problem with a lot of this is, the people you're describing who are getting 2, 3, 4, 10. I've seen somebody with 100 of these things. They could be doing it on HELOCs. I would say the person with 100 probably not, but you're getting a lot of people who they've cross collateralized, right? They've borrowed money from a home equity line of credit to buy a condo because they feel like, oh, I did so well with my house and I should tap that equity to continue my real estate investment empire, right? And that's where I think the big systemic risk is.
Big systemic risk. We're going to have to delve into that a little bit more. We're going to take a break for some messages and back in 2 minutes with Daniel Foch of the Canadian Real Estate Investor Podcast to talk a little bit more about condo deliveries, because I think that the problem could actually be getting even worse. Stay with us, everyone. Back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour. We're chatting tonight with Daniel Foch of the Canadian Real Estate Investor Podcast about the current state of the real estate market. And we've been talking a little bit about condos, and we're going to come back to single-family homes in a second. Daniel, if people want to reach out to your podcast, how do they do that?
Yeah, the Canadian Real Estate Investor Podcast is available on all platforms, Spotify, Apple Podcasts, etc. If you just search Canadian Real Estate Investor, it should come up.
Appreciate that, and appreciate you coming on our show. So I've been told that 2025, this year, is going to be the year of the greatest amount of deliveries of condos in history. That there was something like 20 or 25,000 condos that were actually completed and delivered in 2024, but there's going to be something like 36,000 condos completed and delivered in 2025, which would suggest that everything we've talked about is going to get even worse in 2025. Is that right?
Yeah, I would say, I mean, it's not unreasonable to think that Toronto could end up as an oversupplied market on the resale side of things. It's really interesting because, we went from saying we had a supply problem and supply scarcity that was causing the market to, to overheat. And now all of a sudden, just a couple of years later, we're talking about a supply flood, right? Or an oversupply in the real estate market.
But could it get worse with this? Like all these numbers about a 40% decline. If we've got, and I don't know, may know the numbers better than I, but if there's even more condos being delivered in 2026 or 2025, by definition, that 40% should get even bigger, shouldn't it?
Yeah, for sure. There will eventually be a point where, we would find a bottom, let's call it, and you'll get buyers who start re-entering the market. I mean, we've heard, tons of anecdotes of buyers on the sidelines, I think the condominium product is compelling for first-time buyers, especially who want to stay in an urban environment. Um, and we are seeing first-time buyers begin to re-enter that market cautiously, but not by any means in a meaningful way. And so I would say, yeah, like I think that based on the supply and demand imbalance, you have a lot more pressure on prices going down than going up. The question is, does that spread to your kind of ground-based products where you've got, single family homes, row houses, semi-detached houses? Are those going to be impacted by this as well?
So, this comes back to my first question a couple minutes ago, is why doesn't it? If you think about people that are taking a look at buying their first home, and what they'd really like to buy is a single family home, or maybe it's a semi or a detached or a townhouse or something like that. And if all of a sudden they're seeing condos that are 40% cheaper, why wouldn't they stop looking for a townhouse or stop looking for a semi and move into a condo for a while? I had dinner with my kids, frankly, last night. And that's exactly what they said, is that they're going to be thinking about going into a condo for a year.
Yeah, and I think that that's kind of the point that we're reaching, right? Where you've got a lot of people who are saying, like the detached house that I'm going to get is pretty far from the core. It's not really that much bigger than a condo, and it's twice the price, right? Or three times the price in some cases. So I think that many people are they're kind of answering that question with, yeah, let's look at some bigger condos, right? And so you're starting to see first-time home buyers enter the condo market. I think the one factor that protects the single-family detached house in that regard, the demand for single-family detached houses, is a lot of the people who are selling the condos to those individuals, at least the end users, not the investors. And investors are really, it's worth noting, like investors are very much concentrated in smaller condos, simply because they were attracted to the low price point and the high rents per square foot. So, the end user sellers who are selling these condos to the buyers that we just described, they might be upsizing, right? And so you can either get, demand get pushed up the housing ladder, let's call it, or you can have demand fall down the housing ladder. And I think kind of both factors are happening. It really depends. Like if condominiums fall significantly from where they are today, like we saw another 10% downside in condos, it would be reasonable to assume that the detached market would probably follow that. But without significant downside in condo prices, I think detached could remain relatively safe, like relatively price protected from from that factor.
I don't understand that. I don't think that makes sense. If people need a place to live, and if there's a whole slew of places to live that may be smaller than you'd like, but they're a lot cheaper and they're a lot closer to downtown and where you work. It's a pretty, and they're either available for rent at prices for rental rates that are going down, or for buy that are at buying prices that are 40% cheaper than they were a year ago, and maybe even more this year. Why wouldn't it impact, first townhouses, then semis, then single family homes? Like, it just doesn't make sense to me that you would be able to be insulated. I've had this argument made to me about waterfront, that, we don't build any more waterfront. And so therefore waterfront homes will always hold value. I sort of get that. But a single family home, particularly a smaller one, is a substitute for a condo, or a condo is a substitute for that.
Yeah, I mean, I guess there's a couple of ways to think about that, and I'm not really fully convinced that single family detached homes will hold their value, but for argument's sake, there's a couple of factors that are contributing to what could keep them propped up, let's say. So the one would be like the municipal governments are upzoning them. So now all of a sudden, your single family lot in the city of Toronto, when its input value is the same, right? So the land cost is the same, but its output value is 4 units now rather than one. And so it kind of has a bit of like a intrinsic like development value, let's say. The other piece is, then that's compounded even more for the new major streets program in the city of Toronto. So Toronto's major streets program basically upzone any property that's located on a major arterial road to 10 units without site plan approval and up to 60 units with site plan approval. And so those upzonings technically make the land that a house is on a little bit more valuable. That's probably factor number one. Factor number two is it really comes down to an affordability thing, right? And so when we go to those one person condos, that's a one person household realistically. Like, you can't comfortably, it's very difficult to comfortably cohabitate in a 350 or 400 square foot condo, right? And so, you know, your two income households are looking for maybe a 2 bedroom 1+1 or 2 bedroom or a 3 bedroom condo, which now all of a sudden you're at, 900, 850, $900,000 condo, and your maintenance fees are, $500-$600 a month. And so your total cost of owning that is, I don't know, $3,000 a month, where you can buy a detached house in the 905 for comparable ownership cost, right? Not in the 416. I mean, maybe in certain areas like, fringe, like Etobicoke or Scarborough. But like in the suburban markets, you could probably find a replacement product. And so, again, going back to that, where the core condo does compete with those fringe detached houses, that could be the other factor. Because ultimately you're limited by the income of the two individuals living in the house. And if it ends up being, if we're talking about studio condos, which are really the ones that are flooding the market, like the majority of the stuff that of the supply that you just described is tiny, like they're like hotel room size condos, right? And so I don't know if they would directly exchange with a single family detached house with 2 or 3 bedrooms and 2 bathrooms, right?
No, I agree with you. I don't think there's a direct substitute, but it's, once it becomes pretty compelling, and those studios aren't going to be on the market forever. At some point in time, they're going to lower their price enough that someone moves into them, and the people that are going to move into them, maybe not right away, but after time, when it comes very compelling, are going to be people that would have been in a 1 bedroom, and then the 1 bedrooms are going to have greater supply and less demand, and so therefore the people that would have moved into a 2 bedroom are going to move into the 1 bedroom, and up, like, it just doesn't make sense that you've got a commodity which is a place to live, and if you've got a massive oversupply in one part of that spectrum, which is smaller condo units, and the prices go down by 40% and maybe more in 2025. And, we haven't talked about 2026. I understand there's 18,000 condos being delivered in 2026. So, this is going to continue for a while. It should wash through the whole market.
And I think it will.
It's the old adage that, people said recessions were the best time for beer sales. Yeah. And the reason why is because people stopped buying expensive wine in a recession, but they still wanted to drink. And so, and beer sales went down when the market went really good. Why? Yeah. Because people drank less cheap beer and went to premium beers and expensive wine and whiskeys and bourbons. So, even though you've got different segments of a market, it's one market.
Yeah, you're right for sure. Like I don't disagree with that. I just think that there's a lot of factors at play. And I'm interested to see, like, I would still say there's probably about 5 or 10% downside risk in the detached market, whereas I think there's probably 10 to 20% downside risk in the condo market, and so I would, like, I think that the competing factors mute the direct impact on or minimize the direct impact on like, I don't think it'll be a 1-to-1 where if condos continue dropping at 10%, I don't think it'll pull the detached market down by 10% in that regard.
Well, I guess one of the conclusions of this conversation is we really should try to get statistics that are not the whole market by itself, but split into condos and townhomes and single family homes. I'm not sure if those statistics are available, but what you're suggesting is that, sorry, go ahead.
Yeah, no, I was just gonna say, like, I can pull all of that data. I can, like, strip things out asset by asset, neighborhood by neighborhood. Like, we actually, I was on the team that built the data science platform for the Toronto Real Estate Board. It's called the Habistat. So I'm happy to take you through that one time and show you the stats. But yeah, I mean, by and large, the supply right now is majority condos, and so it does have a weird impact on the average and median metrics because condos can skew things up or down if they're lower price. So they could even skew the average price up if condos are if more of your first time buyer condos are selling than your investor condos, as an example.
Well, it's interesting because in addition, what you're saying is that the supply increase, this 48 or 148% increase in listings that we saw, you say is primarily small condos, but then we also saw the statistic about prices going up for things that are sold, which doesn't seem like it makes sense. But if what you're saying is that the average price is based on primarily the more expensive luxury single family homes, and that's actually what is selling, so it gets into the statistic, and the small condos aren't being sold, then they really are completely different numbers, and they have no relation. One is the average price of luxury single family homes, and the other one is the increase in small condos. And so I guess we really need to get that segmented information to make any sense of it. I got to tell you, I am seeing better price, lower price, big deal on single family homes. And your comment about upzoning, a lot of those are on construction, renovated, or completely brand new homes that contractors bought 3 years ago, and took down a small little bungalow in the city of Toronto, built a monster home, trying to sell it for 4 million, or now listing it for 3.5 or something like that. So they're desperate to get out because they're worried about what's going on. They've got debt at high rates. They want to get their house sold, and the prices are coming down. Now that may not show up in the statistics, but that's what I see day in, day out. Anyway, we got to take a break for some messages, and we'll be back in just 2 minutes with Daniel Foch of the Canadian Real Estate Investor Podcast, talking about the housing market in the GTA. Stay with us, everyone. Back in 2. Welcome back, everyone, to the Brian Crombie Radio Hour. We're chatting tonight with Daniel Foch of the Canadian Real Estate Investor Podcast about the real estate market in the Greater Toronto Area. And I think it's got applicabilities across Canada, but we're focusing primarily on the GTA. Daniel, I got to ask you about development fees, because that's something you and I talked about before. Lots of people have talked about it being a challenge. First Vaughan, and then recently the city of Mississauga have decreased development fees fairly substantially. The city of Toronto hasn't touched them as of yet. What do you think? What do you think of the movement of cities to reduce development fees? Is it something that other municipalities should consider, or does it complicate this factor we've been talking about right now?
I think municipal governments have realized that they would rather have 50% of something than 100% of nothing, and with Vaughan kind of leading the charge on that, although they were also leading the charge on increasing their development fees prior. So the relative discount is a little bit lower, but you get a city like Mississauga following suit, and it kind of circles back to that conversation around downside risk on price from my perspective as well, because this is a cost factor of new supply, right? So if all of a sudden your cost of new supply is getting reduced, then your new supply prices can come down, which means further downward pressure on house prices, both detached and condominium, although condominium is primarily what's being produced by developers right now. But yeah, I think municipal governments have realized that developers cannot afford to build houses. The market is not willing to absorb the units at $1,400 a square foot. And so the only way that anybody's going to make any money, developers, municipalities, everybody in the supply chain of housing, is if we can deliver them to the market at a price that they're able to pay. And that seems to be where we are right now, is at about $1,000 a foot. So there's a big gap that needs to be covered by all the input costs to developing that unit. So that's your land costs, your service providers, construction costs, development charges, developer margins, et cetera.
The development fees coming down by 50% in Vaughan and in Mississauga, do you think that'll transfer over to the city of Toronto?
Yeah, I think eventually. I think Toronto will be very slow to do it. I think Mayor Chow has made an effort to reduce them. It seems like a bit of a half-hearted effort, but an effort to reduce them nonetheless in purpose-built rental. And so I think that might get more rental housing produced. And I think that probably at a certain point they'll follow suit, because we know the city of Toronto makes a lot of money from development charges, and not only that, but their municipal land transfer tax, and governments, the provincial government, but also municipal government in the city of Toronto, which is unique. No other municipality in the 905 has a municipal land transfer tax. So this is a revenue stream for them. The one development charges are their capital projects revenue, so they can't really use it for, they can only really use it for infrastructure. But the municipal land transfer tax is part of their operating budget, and this is income that they need to produce, and they're not seeing it. And so I think that they're going to start scrambling to try and figure out a way to reintroduce that revenue.
So if sales are down, they're not going to get it. So does it make sense to come back to your comment about 50% of something versus 100% of nothing? Does it make sense to get rid of that land transfer tax or reduce it?
Well, I'm of the opinion probably like that, realistically, sales are down because people can't afford houses. If you make houses more affordable, as we've seen with the limited price declines, people will start buying when they can afford houses again. Most Canadians want to own a home, right? For better or worse. That's just it's an embedded thing in our culture. And so if they can improve the economics of those units, then yeah, we'll probably start seeing more transactions. And so I think it would be wise for them to continue doing it. The other piece that's interesting, an interesting way to think about it, is like the reason Vaughan started and then Mississauga followed, and I would expect all of your 905, like kind of the ring around the city of Toronto will follow suit, is because 905 condos all compete with each other. Like if somebody's buying a condo in the 905, they don't really care. They're indifferentiable between Pickering or Vaughan or Markham or Richmond Hill or Mississauga, right? Those are all pretty much the same thing because they're all far from the core and they're all somewhat transit accessible. They don't, a 416 condo is a little bit of a step above that, but eventually, if all 905 condos have reduced their cost structure, 416 is going to see no development, and all the developers are going to start pushing out into the 905, and all of the buyers are going to be buying those 905 condos because they're significantly cheaper than a 416 condo. If that happens, now all of a sudden they're going to be forced. I think it would be very wise for them to be to kind of react in anticipation of that happening rather than in response to it.
I think that Build and other organizations have suggested that 31 or 32% of the cost of a new house, new condo in Toronto is taxes, combination of development fees, land transfer pricing, and GST, HST, et cetera.
Yeah.
And that money is taken out up front rather than long term, so that for the government is making more money than the typical developer who makes 15 to 20%, and they make that at the end. So I think we've got things wrong, where government is taking substantially more than the developers, and with no risk. And I think that's one of the reasons why we've got this unaffordable housing. Let me ask you about single family homes then again. So we've got this massive increase in condos, condo deliveries, and in a situation where we've got a supply demand disequilibrium, where supply is outpacing, it would appear, demand right now, and you've got some people think 2 years of condo inventory on the market right now, potentially increasing, and prices are coming down. That sounds like what you want when you're in an unaffordable situation. You want to create affordability, and so that's what you want. So it sounds like what we need to do is increase supply of single family homes.
Yeah.
But we're sort of constrained. We don't have a lot of land. So what's the solution on single family homes?
I mean, probably denser single family home concepts, perhaps more sprawl or more development in cities where we do have land. So, there's a lot of 905 municipalities that haven't yet used all of their official plan residential land designations. I think, probably a meaningful reconsideration of the Greenbelt is on the table. There is a 10-year review of the Greenbelt every 10 years. The last one was 10 years ago. So there should be a Greenbelt, a reconsideration of the Greenbelt this year. I would say that could be among the reasons why Doug Ford's elected to call an early election. I think that there's obviously the cloud of last year's Greenbelt issues hanging over that, and probably will be hanging over that forever. But realistically, I mean, there's so much land in the 905 that is serviced. Like there's literally services available at the road that is locked due to environmental protections right now that could be playing a meaningful role in housing supply. So that's probably a key one from my perspective.
So, Doug Ford and the Conservative Party, not government now since they're up for election, I guess, announced a couple more railway lines, one going up through Bolton, et cetera, new GO train lines, and the 413, which, one would think would provide accessibility to new residential development in the 905. Is that a smart thing?
I guess it really depends on people's perspective, right? Like I think a lot of folks would argue that sprawl is bad, but then there are probably similar people who would say that getting rid of the greenbelt is bad. But the greenbelt kind of forces us to sprawl. Like you have to skip the greenbelt, right? You have to drive around the mountains, let's call it, or drive through the mountains to start building again. And so I mean, as soon as you increase the distance from of a worker to their workplace, the cost, the environmental cost or the consumption of whatever fuel it takes, energy it takes to get them to work, increases. It's not to say that that either side is right, but I think that it will obviously as you get further away, land gets a lot cheaper. So if you want to make more affordable houses, and available for workforce housing, you kind of have to go and access that cheaper land, unless we can figure out a way to get cheaper land delivered to the market in core areas, which it seems like we just aren't capable of doing here in the GTA.
So, our home prices are like twice what they are in the United States. Almost whatever metric you look at relative to disposable income on a per square foot basis. I've been looking recently in New York State. It's incredible that house prices there for very comparable prices are half or less than they are
Right.
in Canada, and even in resort settings they are. We had this huge depreciation in housing prices in the United States after the 2008 financial collapse, Great Recession, that we didn't have in Canada. Now, housing prices have crept back up in the United States, so they're back to where the 2008 levels were, but housing prices in Canada have doubled since then. So lots of commentators have said there's a bust coming in Canada, and it's not happened. It's never happened. Now, it may be happening now in condos, but you've argued, and other people have argued, it's not happened in single family homes and will never happen in single homes. What's your sense? Do we have a bubble in real estate, and are we ripe for a bust, or no? It's going to be in the condos, and that's it.
Well, I would say we already saw the bust, right? Like I think we were in a bubble, and I think we're on the other side of it now. And I think that policymakers. So there's a couple of factors here. So number one is like we saw if we look at relative to the peak in Q1 of 2022, we saw the largest drop in house prices in Canada take place after that. So, the peak was frothy and prices still haven't come back to where they need to be affordable, but they've done a lot of work, right? So they came down about 10, 15, 18%, let's say, off peak, and we're still there. We basically saw a huge drop, and then the market has been sideways since then. I think that the setup's very similar to the 90s. Like a lot of factors look very similar. We saw a record number of immigration, a record number of temporary foreign workers joining the Canadian economy in 1989. House prices peaked, interest rates were cheap, and then all of those things changed heading into 1990 and 1991. We saw a big drop, a very steep drop in house prices in a 1 year period, and then the market traded sideways, if not grinded down a little bit for the next 4 to 5 years and bottomed in 95. And then it took about 5 to 10 years to get back to its nominal peak. I think it was 2002 when we hit the 1989 nominal peak, and that's nominal again, not adjusted for inflation. The reason I mention inflation is because I think that that's really where the key factor is. If you adjust that for inflation, your house prices took until 2012 to get back to their real peak, right? So inflation adjusted peak. And I think this is the factor that we're seeing happening in Canada. We just had 2 years of relatively high inflation. And so even though house prices were stable, your real house prices actually decreased like 6 or 7%, right, relative to inflation. And right now, yeah, house prices are up 1.6% or 1% or whatever it is, or maybe even if they're at zero, but inflation's at 1 or 2%, like even if it's in the target range, the cumulative erosion that you have in your real house price relative to inflation over the 10-year period of cumulative 2% inflation, if house prices are sideways, is really, from my perspective, what is I don't want to call it like the bull case, but that's the only factor that is really supporting house prices, is that we're seeing an erosion of buying power in the Canadian dollar. It's like, people say house prices always go up. It's like, do they really always go up, or does the buying power of a dollar always go down? It's the same thesis that people, use to support things like Bitcoin. And I would argue that that's really the better way of looking at it, where, a house is you take all of these goods and services that are inflationary, right? So we have union trades that, it's a fixed labor cost. We have copper, we have, wood, all of these things that went crazy during the pandemic, and you bake them into this cake, and that now it depreciates, but those are all inflation. Like, as soon as you lock them into that house, you're capturing the inflationary force of the market. And I think that the writing's on the wall that the whole thing has always, or was always, going to be probably a devaluation of the Canadian dollar relative to the USD, and that's going to cause more imported inflation, and real house prices are where people are going to suffer. Nominal house prices, it kind of matters, but it doesn't really matter in the grand scheme of things. What matters is what's happening to your house price relative to inflation, and as far as I'm concerned, that hasn't gone up in 4 years.
Daniel Foch, thank you very much for joining us. I really appreciate it. It's been an interesting conversation. We're going to take a final break, and come back with some of my own conclusions in just 2 minutes. Stay with us, everyone. Daniel, really appreciate it. You're unbelievably knowledgeable in the real estate market.